Hey everyone, welcome back to the show. I'm your host, Nicholas Wenzel, and today I had the pleasure of sitting down with Dylan Bain, a top DePIN analyst at Messari. In this episode, Dylan shares with us what excites him in the world of DePIN and where he sees things going in the future. Dylan also gave us a masterclass on Glow, the DePIN project he thinks could become the largest protocol in all of crypto. He broke down why energy is the most underhyped sector of DePIN and what metrics matter the most when tracking protocol growth. He also shared his bold prediction that DePIN could soon become the second highest revenue generating vertical in crypto. Whether you're new to DePIN or you're already deep in the weeds, you're going to walk away from this one with a ton of insights. I hope you enjoyed today's episode. All right. Hello, everyone. So today we got Dylan Bain on the podcast, and he's one of the top researchers in DePIN, in my opinion. He's an analyst at Messari, and he believes DePIN is the frontier. Dylan, welcome.
Thanks for having me on.
Yeah, so I'm excited to talk all things DePIN because I think you're a really good expert to share your opinion here. And for anyone who doesn't know, you should definitely follow Dylan on Twitter because he posts all kind of good research on there. So Dylan, I'll jump in with a question straight off the bat. So in a podcast appearance in November 2024, I was listening to it and you said Glow will be the largest protocol to come out of crypto, out of DePIN for sure. So what is Glow? Could you give a quick overview and why do you hold this belief?
Yeah. So maybe a bit of some hyperbole in that answer, but Glow is basically an energy DePIN. So what they do is they incentivize the deployment of solar panels. So just think of like either in a solar farm or just like solar panels on your roof. Um, and in exchange for, you know, anyone putting down these solar panels, they get Glow tokens, right? So that's the reward mechanism. And the idea is that in order to accelerate the transition to a clean energy economy, where like instead of using fossil fuels, we're using more clean energy sources, solar predominantly, and wind and other sources as well. We need to basically provide more incentives. So there are like a whole bunch of carbon credit incentives of various means. Some come from the government, some are like voluntary. Um, but what Glow wants to do is basically fund edge solar farms panels. What this means is solar farms are like they need just an extra boost of incentives to be economically viable. So like 90 to like 99% viable without an extra incentive, and then Glow tokens incentives get them over the line. And the idea is that this is the most capital efficient way to expand solar energy and clean energy in general. And the reason why I say like this is so high potential is I think one, like you can already see Glow has generated a ton of revenue. Is like, deployed hundreds of solar farms across the world from India to Colorado. It's done over 20 million in protocol fees. And it's really addressing three of like I think the largest that's like three very large catalysts that are kind of I think will prop it up in the next 10 or so years. First is like I said, clean energy, so reducing carbon emissions. Second is we have a very outdated grid that's relying on fossil fuels. We need to transition to clean energy, which is more capital efficient. Solar powers out the cheapest source of energy, which a lot of people don't know about. And Glow can help us get there in the most capital efficient way possible. And then the third is generative AI. So we have massive increase in demand for energy. Glow can help power that with solar. And because there's a lot of talk on where are all these GPUs going to be, there's kind of a deep in play tie-in where it might be more distributed. It might make sense that the power that's generating distributed compute instead of these very concentrated data centers is going to be basically powered by solar panels that are right next door. And Glow can help incentivize that too. So we have three large catalysts from AI, an outdated grid, clean energy, reducing carbon emissions, and then a model that basically expands solar in the most capital efficient way possible. And if you listen to the Glow team, very ambitious. Like the idea is down the road, the governments will be basically subsidizing these farms, or even the United Nations, to basically, hit clean energy goals from like the Paris Accords or the Paris Agreement. I don't know if it will play out exactly like that, but I think there's enough of a market demand and there's enough opportunity where Glow can become the largest protocol to come out of DePIN and maybe crypto.
Nice. I like it. That makes a lot of sense. And one thing you mentioned is that the token incentives kind of get them over the line to profitability, but they're not the entire source of the revenue. Like they also get carbon credits and things, which I think is interesting to point out because a lot of DPINs struggle with too much token emissions to basically subsidize their rollout. When maybe Glow has an advantage here because they aren't the sole source of revenue for their deployers.
Yeah, that's right. Like the way Glow works is actually you contribute a very large protocol fee up front, which I'm not sure what the number is, but between 4 to 10 years of revenue. And then Glow doesn't worry about revenue collection after that. They do that to basically reduce operational overhang and just, one-time fee, and then we don't have to worry about collection or monitoring. So then, like, you can sell your electricity at the same time. Um, if you have excess, you can power your own home. And you also can get just normal subsidies from the government, right? Just normal solar, I'm forgetting the term, like RECs. So, yeah, basically Glow is like an extra subsidy on top of all these other revenue sources that gets you over the line.
Nice. Yeah, that's very unique. Cool. So another question. You mentioned that DPIN is in its infancy, and I'm curious what metrics you like to use to keep up with the with tracking the growth of a protocol.
Yeah, so I think DPIN is a relatively new category. Like, we coined the term DPIN and Messari just a few years ago, I think 2022. I think these networks really didn't start emerging until 2020 or so, and really didn't start picking up until the last 2 or 3 years. So these are like real businesses that are being built. They're not like crypto native businesses, aren't really grounded in fundamentals or reality. So they have to actually generate revenue, they have to get users, they have to actually put down real infrastructure, and this takes time. So just given that, we're 4 or 5 years into the existence of DePIN, it's just in its infancy. Like you don't even have like a real deep into I think has true product market fit and has escape velocity where they're generating hundreds of millions of dollars in revenue a year. So that's kind of what I mean there. And then was the question metrics to track?
Yeah, what metrics? I always like to go to revenue for for like
Yeah.
fee paying things because that's a good way to kind of cancel out the noise.
Yeah, I think revenue is probably the best metric just because you can generalize it across all DPINs. So, one of the issues of DPIN is just like every different subvertical is like completely different. So it's hard to like compare these protocols in an energy sector DPIN to like a bandwidth or like a file storage DPIN. Revenue is like a much easier way to just generalize it across the board. I think if you're looking within sectors, you can probably develop some metrics. I think like, extent of coverage supplied versus like total possible coverage. How much energy is being produced, how much carbon credits in Glow's case. Helium Mobile, you could do like total network coverage. In some cases, nodes can be a good metric, although that can be a bit misleading because if there's no demand, side on the revenue or they're not generating revenue, then like what do supply side nodes really mean? But yeah, everything's very specific by vertical, and I think revenue and later on profitability is probably the only generalizable metric.
Yep. Are there particular DPIN sectors that you believe are overhyped or underhyped right now?
Yeah, I'd say on overhyped, um, it all varies by protocol, but I think there's a lot of data collection protocols, sometimes just like phone collecting data where it's like not immediately obvious that there's like a worthwhile demand side, or like you'll be able to aggregate enough revenue to make this actually a sustainable business. So I think a lot of DePIN's are just like we collect data and it's a unique data set and it has value, but I think very few actually have a path to profitability or like a substantive demand side based on the data they're collecting. I think compute is like overhyped and underhyped. So like I think there might be too many protocols emerging. Like they are tackling this massive market and there is like a dire need for compute. At the same time, a lot of them lack moats, they lack differentiation. It's hard for them to compete within each other, and it's not entirely clear to a lot of people why we need a decentralized marketplace for compute versus just using a centralized marketplace. But there is still potential there. It's just, I think, probably overhyped since it's the most, I'd say, visible sector within DePIN right now. I think underhyped would be energy just because of the sheer potential. Like most of these protocols are very early stage. Most haven't launched to mainnet, so they're not going to get a ton of market attention. But I think there is a huge opportunity. I think distributed energy resources and solar panels are like one of the best use cases for DePIN. So I think energy is probably the most underhyped DePIN sector.
Nice. I love it. You tweeted, real revenue, not just token emissions, will define DePIN winners. What projects are currently leading in revenue generation, and do you think those projects will stay in the lead for the next couple years?
Yeah, so I think revenue data is not like amazing in DePIN right now. So I think DePIN Ninja, which is developed by EV3, which is like a DePIN focused VC fund, they're doing like a pretty good job of compiling like a ranking of DePIN revenues that I think most people are using right now. And it's getting better over time. So they're marking what's verifiable, what's unverified, what's on chain, what's not. And on that, I think we see among the first are like compute protocols like Ether, IO.net, not fully verified, so we don't know like what exactly revenue entails. So there's like a caveat there. Then we have other computes like Akash, Render. This is more on-chain verifiable. So like Akash is doing like 4.6 million in revenue on an annualized basis. Render is in like the 2 to 3 million range. We also have protocols like Helium. They're doing like 2.5 to 3 million. GeoNet's doing about 3 million. Glow. The protocol fee is a bit misleading in terms of value accrual if you think about revenue, but I think it's over 20 to 30 million in total protocol fees so far. But a lot of that's going to be redistributed back to the solar farms over time. So that's a bit more complex. But I think across the board, we're seeing 40 to 60 million in like verified revenue that's reliable, and it might be as high as 120 million. But we're not quite sure at this point. So yeah, like at Messari, like reports that I've written, like I think I said 40 to 50 million in 2024 was like the revenue figure sector wide, and I think it can grow to probably 150 million plus in 2025.
Nice. So it kind of sounds like slow and steady growth, and very early. I mean, for a whole vertical, a whole industry to only be making 100 million or so seems to be like there's a lot of opportunity still out there.
Oh yeah, I think that's why I say we're also at the infancy. Like there are protocols here that can be generating billions of dollars. Like Glow wants to do trillions of dollars in revenue, for example. So like it's very early. It's just I think we have to figure out how to grow the demand side in a way that makes sense with a DePIN.
Are DePIN incentives currently too focused on token inflation and paying their deployers? And how do you see that evolving?
Yeah, I think tokenomics are one of the core problems of DePIN right now. Like we've had protocols just have to shut down just because they mismanaged their tokenomics. Pollen Mobile comes to mind. Um, so I think designing that is very tricky. We've done like a few reports in Messari on like token emissions and rates. What we see is like around 5% of tokens are emitted in the first year, and then that kind of continues as like 10% is about the average or median token emission rate for a protocol in the first 2 years. And then over 4 years, 20% distributed to miners. So, which is also about on par with like what the team and investors get. I don't know what the optimal rate is. I don't know like like how it should be segmented. Like a way like the reason why DePIN's even use tokens is really I think to overcome the cold start problem. So like you can bootstrap a supply side very fast using tokens. Venture miners, which are just infrastructure providers who join the protocol at onset, they're taking basically an outside risk to get asymmetric reward from the tokens, right? So like it makes sense to like reward these initial infrastructure providers, but I think the hope and like what the need really for DePIN in the long run is that once the demand side grows and basically you've surpassed the equilibrium point of supply side costs and demand side revenue, um, I'm not sure if like you even need to fully reward a lot of these nodes in native tokens. I think you can probably do so in USDC and just promise a fixed yield. Or like some ideas have circulated like do convertible debt type tokens where like you get some type of yield and you can convert it to equity like tokens later, or maybe a hybrid of USDC fixed yield and like a smaller percentage of equity tokens. I think like that sort of transition is probably going to be needed for a lot of DePINs in the long run. Um, did I disconnect?
Yep, we're back.
Okay. Um, but yeah, I think in terms of issuance rates, like everything is basically experimental at this point. Like it's hard to say when protocols should change their design. There's a lot of pushback on ever-changing design. We've seen Helium iterate on models, and that's had a lot of problems. So like I think the easiest way and probably the best way is just use a very simple token design that doesn't reward too much up front, and then work from there. Um, yeah.
Yeah, that's well said. I think that makes sense. Like you can always change it later, but if you emit too much too fast, it can kind of ruin your project's longevity. What blockchain architectures do you think are best suited for DePIN? So you got like ETH L2s and its L2 ecosystem, and they're trying to do interoperability, or you got integrated chains like Solana or Sui that try to put a lot of throughput on one chain. Do you have an opinion there?
Yeah, so like what we've seen is most DePINs just ended up building or migrating to Solana over the last 2 years. So a lot of protocols were on Polygon before, um, and for various reasons. I think a lot of it was just like simplicity and just Solana like being very accommodating to DePINs. They migrated there, as well as just the attention on Solana from like broader DEX volumes and meme coin trading. I think the bottleneck for DePINs isn't really on the chain and where to build. I think it doesn't really matter that much right now. Like you could build anywhere, and like that's not going to really affect your tokenomics that much. Um, I think like the real problems to solve are like I said, like sustainable tokenomics, go to market, growing your demand side, rewarding the supply side. How do you verify data or like resources procured by DePINs? I think these are much like larger problems. Um, and I think where chains can kind of come in is providing support there. So I think we've seen some like DePIN specific L1s like Peak and IoTex who provide, I'd say, a lot more hands-on support than some of the larger L1s or L2s. You just don't have any DePIN specialists can, and they can really get like in the trenches, like with founders and help them solve these problems. They can make tailored decisions for DePINs that help solve the larger problems present. So I think chains are best suited or should be like helping founders actively solving these larger problems in DePIN. And then like the actual chain itself, like I haven't seen any performance issues. Like there's no DePIN of enough activity right now where they need 100K TPS like you'll see on like Mega ETH pretty soon. If they do become truly global and are generating billions of dollars of revenue, maybe that's different. But we haven't seen that yet. Um, if you're looking very far into the future, like it makes sense to build on like Solana or like a high throughput L2. But I'm not sure like that's like really a prime concern right now. I'd say another consideration is DeFi. We're seeing a lot of talk about DePIN's integrating more of DeFi. We're seeing protocols like Glow again develop something called Glow Swap, which is like a native AMM. Um, you probably want to be in an ecosystem that has strong liquidity, that has strong DeFi protocols and other composable elements. If you think DeFi might become a large component of your protocol. So, yeah, if I was going to boil it down, I'd say like build with like the long term in mind, like throughput, DPS doesn't matter too much, but it might one day. You want to have like hands on support where you can get actual advice from the protocol from the underlying chain, ideally on DePIN problems, and then think about like DeFi. If you want to integrate there, what's the best chain for that, given your needs?
Yeah, that makes a lot of sense. Yeah, I wonder how the intersection of DePIN and DeFi will come around. Like, I think there's maybe new financial primitives that could come out of it, like the intersection of the two, but we haven't seen them yet. That'll be
Yeah,
interesting to
I think some
imagine.
of it's going to be like financing. So, like on chain funds where anyone can just deposit collateral and then that's loaned out to like DePIN operator companies or then pay a fixed yield on chain. So, like kind of an RWA play. Very
My,
early, we're seeing a few protocols. Um, yeah, go ahead.
yeah, my last guest was actually David Choi from USD.ai, and I guess that's who you're talking about.
Yeah, yeah, them, I think MetaStreet, I think we've seen Huma Finance do some activities. Also heard like some like more early stage protocols working on it that aren't public yet. But I think like that's a great avenue. Like a lot of people talk about RWAs. One of the main issues is like RWAs already have existing infra. Like it's going to be kind of a slow process to bring these assets on chain and like actually make tokenization make sense for novel use cases. DePIN like actually needs financing. It can't get financing. And for like certain types of DePIN where like miners want to like fund new infrastructure, solar again comes to mind, compute's another one. Um, crypto native capital is a good source of that. So I think like we'll see a lot of activity there.
Yeah, what gets me excited about USD AI is the ability to profit from DePIN, like to be able to speculate on the future of DePIN being bright without needing to buy the DePIN token. For example, like I love Helium, but I don't know if I can really hold the Helium network token or mobile. Like it's great, but I don't know if that's actually gonna appreciate in price. But if I could fund the deployment of DPINs through debt and I can get like a decent yield on that, that sounds great to me. And that's what's exciting about that to me.
Yeah, I agree completely. I think there's like a lot of issues of like figuring out like off-chain verification and like all that auditing, but I think working with like credible companies, like I think there's a way forward there. So like yeah, I think that's a great actual DeFi use case that's not funding, casino gambling, but instead real world infrastructure.
Yeah. Um, I see stablecoins and DPINs as the only two non-speculative verticals with PMF in all of crypto. Do you have any opinions on how these two might intersect?
Yeah, I think like the most immediate way is just token incentives or just payment for deep in resources will be done in stable coins. So, this will be abstract in various ways. Sometimes you might be doing fiat and then that's converted to stable coins and that's converted to the native token or whatever mechanism a protocol chooses to do so. I think especially if you look internationally, like it's very easy to do stablecoin payments to get deep in resources or deep in data. So I think like that's going to be the largest integration. And then like I think there's like some cool experiments of like private equity funds going out, buying businesses, integrating deep in, integrating stablecoins, cutting transaction fees, cutting costs for the resources the business uses, kind of onboarding that business's users into crypto, kind of indirectly by putting crypto tech on the back end, I think we'll see like an integration of like stable coins and DePIN. That'll be very interesting there.
Yeah, so for anyone who's not familiar, he's talking about Santiago Roel Santos. He's trying to acquire companies and make them more efficient by putting crypto and DePIN on the back ends. And as far as I know, he's the only one trying to do that publicly. Do you know of anyone else?
Not publicly, and I'd say he's probably by far the furthest along. But I think there are chains like Solana who are actively thinking about how people could do that on there. Um, but yeah, I think it is very experimental and like there's going to be a lot of risk up front. So I think someone kind of needs to validate that use case. Hopefully Santiago before it becomes more adopted.
Definitely. And another interesting project in the stablecoin and DePIN front, which I'm not sure if you've heard of them, is called ZAR, and they're on Solana. And what they do is they use DePIN incentives to make a network of like money changers, so people who will take cash and give stablecoins. And I think that's really interesting because you got to leverage the physical world with cash, but you're using like DePIN incentives to build that out. And that's like the only intersection of the two that I have heard of so far, besides, what you mentioned with Santiago. So if you haven't checked them out, you should check them out. I think they're pretty cool. If you had $10 million to invest in DePIN right now, how would you allocate it?
Yeah, that's a great question. Um, I think I would. I think the best way is just to buy the underlying tokens of like the more promising protocols. And I think a lot of DePIN's like a venture styled investment at this point or venture styled opportunity. So it's hard to be like, okay, like let's do a DCF, like let's try and project revenue growth. I think like that's not that valuable at this point. I think it's better to look at the TAM, look at the team, look at if they've done anything successful so far, see if there's a scalable model that works, assuming like your assumptions are correct. Um, and then like invest based on that. So just like look at, protocols like Helium, Dawn that's not launched yet, GeoNet, Glow. I think like these are very high potential protocols that have like a large enough market to grow that I think kind of fit a venture styled investment. Um, so, if I had 10 million, I'd probably allocate, diversify across sectors and deepen, and then just like invest in what I think are the highest potential, largest TAM, with the most promising teams behind them, for the native tokens of those protocols.
With $10 million, you could do you could do like angel investing and seed fund raising, because you'd be an accredited investor. So you could also maybe seed new projects. So would you rather seed a new project or buy an existing liquid token?
It's a good question. I think like crypto is kind of funny because I think a lot of these protocols, it's like you're investing in a seed round, given how much traction they have, but they're trading at like multi-hundred-million-dollar valuations. If I was investing in a true seed round, like yeah, I think I'd definitely be open to it. I think like if you look right now, we're seeing fewer deepins emerge. I think like a lot of the cool innovative ideas kind of came out in the last 2 years, and like now that's slowed down a bit. And I think there's like a very larger focus on growth now, just scaling and like actually building out the demand side and like solving more of the hard problems in deepin. Um, so I think like I would probably invest in the most promising protocols right now, and like if there's anything that comes out, in like the idea stage, like I'd be open to that. But I think like there are more established deepins I think have a path to success, and that investing in those teams and in their protocols and just solving the problems that they have in terms of scaling, I think is more fruitful.
That's a good point. If you had to make a bold prediction about DePIN 5 years from now, what would it be?
I think DePIN will be the second. It might be already, I'm not sure, but it'll be the second highest revenue producing sector in crypto after DeFi. I think we're going to see actual unicorn-worthy DePINs. Like we have billion-dollar valuations, but I think they're going to be, generating hundreds of millions of dollars in revenue, on track to billion-dollar revenues. We're going to see, lots of activity in energy, in wireless. I think we'll see some new verticals emerge. So I think we're going to see basically the sector truly find product market fit, really be in the middle of the scaling phase, and on track to become, a blue chip industry. So I think in 5 years, DePIN is halfway to becoming a reputable blue chip, Wall Street worthy industry.
That's awesome, and you're really well positioned for that. You're one of the leading voices in DePIN research, I'd say. I think anyone who's familiar with this space, is familiar with your work as well. So you definitely did a good job positioning yourself for that bright future.
Thank you. Thank you. Could be wrong, but I do think DeFi is the frontier. I do think, TradFi is looking for new places to allocate money. I think a lot of existing industry is saturated, and I think digital assets and DePIN in particular is one of the best growth vectors. So I'm bullish on the space.
What got you into crypto in the first place?
Yeah, it was early in college. I was working on a fractional real estate startup, so just like basically turning houses into like a company that you can buy shares in, and then you get a small dividend check every month from the rental income. And the idea is to onboard like Gen Z college kids into real estate. And we found pretty early on tokenization is the best way to fractionalize houses. I kind of thought crypto was a scam. Like I bought some like meme coins on the side, was kind of just for fun, and like nothing made sense to me. But then I found tokenization. I was like, this is a real use case. Like it eliminates a lot of the dev work. We can take advantage of blockchain composability, interoperability, DeFi rails, etc. down the road. And that's when blockchain crypto started to make sense for me. So I got into crypto, co-founded our blockchain club in college, interned in crypto VC, worked at a large asset manager. I was very focused on tokenization, RWAs, kind of the boring side of crypto. I kind of more of a financy background. And that's what got me into crypto. I think I saw that the real bottleneck, the frontier in crypto, wasn't really on the tech side for RWAs. It was regulatory, it was legal, wasn't something I could make a big impact on. And I saw the more crypto native side, the actual tech, as being where actual value creation can be basically, I don't know, created in the short run. At least I could have an impact. So I got more deeper into crypto native stuff, and then found DePIN. DePIN is kind of like this intersection of like very crypto native business models, a new way of developing infrastructure, leveraging crypto in a way that's useful, and then having all the RWA kind of real world value stuff on the other side. And I thought it was like the perfect intersection that I really liked. And since I joined Messari, I've gone very deep on DePIN. Sorry, coined DePIN, developed a lot of the underlying theory of it. So I found, I think, the right spot for me.
Nice. I love that story. I feel like it's a very natural transition from what you're doing before to what you're doing now. Where should people go to keep up with your work, Dylan?
I think best place is Messari.io, just a research page. I publish a lot of DePIN reports. And then Twitter at Dylan G. Bain, where you'll get more distilled content and just report highlights.
Yeah, if you love DePIN, you probably already heard of Dylan, but if you haven't, you should definitely check him out and read some of his stuff. All right, Dylan, thanks for coming on. I really appreciate it.
Thanks for having me. Love being on.